Good morning and hello, Austin. And let me add my welcome to Cognite 2018. So my name is Bob Galladay, and I run Cognitive Scale's European business based in our London offices. It was a great segue into what we're going to present to you today. The European market is interesting. It's a different market for Cognitive Scale. It is primarily focused around financial services. And that market has really spoken to us. First off, banks, capital market companies, financial institutions want to do things differently. They want to engage with their customers differently and bring new products and services to market. The second way I would characterize that market is that they're spending money. So there's a fair investment that goes well beyond science projects to do something real. But the complexity for us, of course, is from a regulatory standpoint. When we had the financial crisis, and those of you that do business in Europe know that either from a GDPR standpoint, from a privacy standpoint, or providing transparency on the way that you price products, that the regulations are heavy, which just makes this discussion even more amazing. I sat in Akshaya Bhargava's office 18 months ago, and Akshaya said to me, I have an idea. And 18 months later, he has stood up a company, a platform that promises to bring an AI-based next-generation asset management platform to market, and he just went live with his first product. So, Akshay, it's been yes, right? I think that type of speed in a regulated market is just incredible. And come by and see us later for a personal demonstration as well. So when I met Akshay, he was the CEO of Barclays Wealth and Investment Management. And Akshay has done a lot. He has started companies. He has sold companies. He had a leadership role in Citibank. And now he is the founder and CEO of a fintech known as Bridgeweave. So Akshay, welcome to the stage.
Thank you, Bob.
So a couple of questions. Now I get to have some fun. Why did you set up Bridgeweave?
Bob, because you told me to. 18 months ago. Have you forgotten?
That's true.
No. First of all the compliments that Bob gave actually go to a lot of people who are not in this room, including some people who are in this room. So thank you very much. But the idea of Bridgeweave, Bob, was really a combination of two factors. One is through my time that I spent with Cognitive Scale and Manoj and Akshay and Matt and Bob, I got to learn about AI, and I really got excited about what AI could do. I really think it's transformational. Secondly, I worked for a large bank, and all of us who worked for large banks know what a gigantic sum we spend on technology and how little we get for it, and how incredibly hard it is to do something quickly, and particularly if that something happens to be innovative. So the idea that came to me was like, what if we could create fully formed AI-powered financial products on the outside of a large financial institution, make sure that these products are regulatory compliant, and then make them available to banks so that they could deploy them quickly for their customers. That's really the notion behind Bridgeweave. And very rarely in life is there maybe 3 or 4 times in your life, and I'm older than most of you, so maybe 3 or 4 times for me, is that there is an intersection of something that you really enjoy and a market opportunity. And I think Bridgeweave is that intersection for me.
So it sounds like part of it is timing, maybe a little bit of luck, but what's changed that has allowed you to bring the company to market?
The timing is really, that's a very great point. If you look at the demand side and the supply side of financial services, on the demand side, be it mobile phones, be it internet, be it China, be it India, be it millennials, customer habits are changing. I don't need to say a lot for most people to know that. On the supply side, historically, banks have competed with other banks. So it's really super tankers versus super tankers. But fintechs have changed that completely. And now it is super tankers versus speedboats. And I think there is a real need that is being felt in large banks that they need to innovate fast, and they don't really know how. So this whole notion of collaborative innovation that Bridgeweave represents, I think the timing is good. And I'll tell you, 20 years ago, 25 years ago, somebody came to me in Citibank and said, I can build a better product for you on the outside. You know, I would have laughed him out of my office. That's not the case today, thankfully.
Okay. So you're not a Robin Hood. You're not trying to displace the banks, it sounds like. Are you looking to disrupt them in some way?
Actually, that's the interesting thing. I am looking to disrupt how things are done. Because I happen to believe that how things are done in financial services industry across the world is terrible. And there is tremendous room for improvement. So I absolutely want to disrupt how things are done today. But I don't want to disrupt those who do them, not necessarily. So it is really disruption of the process rather than the incumbent. Now, of course, the incumbent refuses to acknowledge something, then they will get disrupted, but they have a choice.
Okay, so you've recently introduced it's a brand new product to market, and I've had a lot of fun using it. It's a beta product, and it's focused on investment insights. So, but why investment insights?
So, you know, you can talk about notion of AI-powered products, but you got to have something real. So we said, what is the first product that we want to launch? And the product that you're going to see is really aimed at somebody who has, you know, maybe tens of thousands, maybe $100,000 to invest, knows the markets, tends to trade from time to time, so is reasonably well informed, but doesn't have a lot of data to help him make good decisions.
Okay.
And what we are trying to do is to create institutional quality information, hedge fund quality information, make it available to a private individual at a fraction of the cost in a very easy to understand and a very easy to use way. Let me show it to you.
Okay, let's
let's
see it.
Folks, what you're going to see is a live action demo. Okay, guys, can we have it on the screens? Bear with us a minute. So what you're going to see is the home page of our mobile app, which shows you a bunch of insight models that we have created. So the product is currently in beta with about 200 customers or so. Okay, that's not it.
Can we get the iPhone, please, if possible?
Get the iPhone? Don't worry, we have a plan B and we can show it to you.
All right.
So what you will see is a bunch of insight models. As a user, you go in, at the very minimum, you don't have to tell me anything, but you have to select some preferences. You have to select the markets you like, you have to select the sectors you like, and as soon as you do that, the app starts to work. There are a number of different insight models. One is around show me companies that I want, track companies that I want to buy and alert me when the probability of them delivering me a positive return over the next 30 days exceeds a certain threshold that I want. There is another one called relative valuations. Help me identify good companies that may be temporarily undervalued. My favorite one is something that I call play. And I'm going to show you. Is it easier if I stand up? Okay. Can you all see it?
So this is kind of old school, right?
Old school.
Home shopping network. I think too many people are using the wireless network here, so we're having a little trouble, but
so,
it is a live demo.
So stop checking your emails, that will help. So I don't know if you can read this. There is a button called track, there's a button called alert, there's a button called create, there's something called explain, and there's something called play. So let me go into play. Now what play does is open up a screen which then allows you to compare one company with another, one company with the index, one company with its sector. So okay, I have to hold it at right angle. If you can see it, pick a company. IBM, Microsoft? Sorry?
3M, he says, yeah.
3M. Okay, maybe 3M. Let me just pick IBM. That's an easier one. All these alphanumeric names, come on. Stop being difficult, guys. You know? So that's IBM. And what you're now seeing is a visual representation of IBM with S&P 500, where the solid shape is IBM. And it's a 6-point scale. It compares IBM with S&P 500 on return on equity, on revenue growth, on dividend yield, on PE ratio, analyst views, and sentiment. I don't know if you can read that. But if you go down, it converts everything to a 20-point scale, 20 being best, and then it shows you the numeric comparison as well. You could say that, look, IBM is a technology company. What's the point of comparing it to S&P 500? Let's just compare it with technology. So somebody's sending you a message. Okay, so you compare it with technology, and all of a sudden the shape has shifted, and you can see the outline figure, that is technology sector, and the solid figure that remains IBM. So now you could say compare IBM to Microsoft. And so I type in Microsoft.
That's kind of mean, but okay. Yeah.
Okay, so you compare it to Microsoft, and all of a sudden, you again get a representation of Microsoft and IBM. And that's really interesting. What this is telling me is that revenue growth for IBM is far less than Microsoft. In terms of dividend, IBM pays a much better dividend than Microsoft. In terms of PE ratio, Microsoft is a much more expensive stock than IBM. Analysts prefer Microsoft to IBM. Sentiment, Microsoft scores better than IBM. But on return on equity, both are about equal. Okay, so this is one of the algorithms. You can share it, you can tweet it, you can WhatsApp it, you can send it to anybody you want. I'll just show you one more because this is a bit. So let me go to alert, which shows you about good companies that may temporarily be undervalued. So I'm going to pick something called SIVB, which is SVB Financial Group. It's a bank that is listed in the US, currently trading at $277.06. Okay? And it's showing you a market signal. I don't know if you can read that, but I'll read it out to you. It says relative valuation at 8th percentile, attractiveness ahead of 64% of its peers, and historic returns at 25%. So let's unpack that a little bit. So it shows originally SVB Financial Group crossed your 15% threshold, so you can set the threshold for undervaluation however you want. On September 10th, at a share price of 325, and as you can see, it's fallen further. Well, surprise, surprise, markets are down. It is currently trading at the 8th percentile of its 9-year price earnings history relative to S&P 500. So it's an undervalued stock. But is it a good company? Here it tells you that its relative rank amongst banks is at the 64th percentile, and that relative rank is made up of 4 factors: capital structure, consensus view, fundamentals, and future outlook. So clearly there's an issue on fundamentals, but on all other fronts, it scores very highly. You can look at, we talked about 25% returns. So it tells you that SVB Financial Group has fallen below this level of valuation 3 times in the last 2 years. And had you invested each time, your average 3-month returns would have been 25%. And it shows you the average chart. It shows you £100 invested would have got you X. And then it shows you each single instance when it had happened in the past. It will show you recent news on the company, on the bank as in this case. And it will show you technical indicators like price charts, relative value charts, RSI, MACD, if you're so inclined. Let me stop here because this is not the easiest way to do this. But please remember, we have a small booth at the back, and we will be able to show you a demo. You'll be able to play with it, and you can drive this yourself if you want. Between Bob and I, one of us will spend time at the back, and we look forward to seeing you there.
So there's some very interesting innovations that are being done in this solution. And I challenged Akshay not long ago because I have a daughter that happens to be a millennial. And millennials, for the most part, want to live forever. And so the notion that I could come to the app and either through voice command or natural language processing say, even though you only know that I like banks and high-tech stocks that pay dividends, in the future, start finding me ideas on biotech companies that are trying to help millennials live forever. So there's a lot of incredible innovation that's taking place in this application and the platform. So a couple of wrap-up questions, Akshay. We have about 4 minutes here. So you showed me some insights, and in fact, on a company that I'd barely heard of. Tell me a bit more about how the insights work.
So the way it works is, you heard Matt and Shay talk about profile of one. So that's the first thing we do. We create a profile for every single user. The user can tell us as much or as little he wants. But we learn from what the user tells us. We learn from what we observe the user doing. So if you follow Amazon, that tells us something. If you don't follow Amazon, that also tells us something. If you spend 3 minutes on SVB Financial, that tells me something. If you spend half a second, that again tells me something. So there's a lot that we learn on how the user interacts with the app and with the insight. The second thing we do, we take in daily data from Thomson Reuters, which comes to us from Cortex. And we run it through a bunch of machine learning models that generate, at any time, about 1,900 insights at any point in time. I can't show you 1,900 insights. So which 5 do I show you? That's where the personalization comes in. And that's where we match the profile with the insight. The important thing is that explainability, and you heard Shay talk about practical, scalable, et cetera. Explainability is a very big part of what we do. It is engineered into every insight and every model that we produce. You spoke of regulation. I spent a great deal of my time with the FCA in the UK, who I think is one of the most sophisticated and advanced regulators in the world of this kind. And they have invited us to join their advice unit, where they will work with us on further development of the product. But explainability is a big part of it. Customer choice is another big part of it. The insights based on facts rather than subjective opinions is a big part of it. So all these factors are engineered into our insights.
Okay. So for those of you that don't know what the FCA is, it's the Financial Conduct Authority. So they're eagle eyes in the market today, and Akshay has done some great things there. So finally, Akshay, what's next for BridgeWeave?
So go back to what I started with. We always wanted to create a platform and not just a single product. We have a product, which is really cool. It works really well. We've got great feedback so far. But BridgeWeave is a platform. We are talking to a few other clients. And it's really interesting for me to see different kind of use cases that are emerging. So we're talking to somebody about using the same architecture and the same platform for a corporate client or corporate treasurer who wants to manage his company's liquid assets. We're talking to somebody who wants to use it for mutual funds. So I see a huge set of opportunities, and I'm really excited. We've got a first product out, and I think before the year is out, we'll have 2 more. So this is really a very exciting moment for us, and I really want to thank Cognitive Scale and the team to get us here.
And Akshay, with that said, thank you for being a great partner and showing us how it's done. And thanks everyone for listening.
Thank you. Thanks.